So whether it's the US market or the China market or any other market, where do the opportunities really lie, especially for 2020 and beyond? So in the next section, I'll be talking about what I believe are the secular growth trends and strongest investment themes in the market for the next 10 years. Now, what does secular? Secular basically means long-term and strong trends. Because sometimes a trend could be a short-term cyclical trend, right? Goes up this year, goes on next year. But a secular trend is one that will be there for many, many decades. So there are altogether 6 growth trends that I would invest in. So what are the 6 trends? Let's take a look. Number 1 is deglobalization and protectionism. Okay, in 10, 20 years ago, the world went into globalization, right? Everyone was opening up, the US, the UK, and so on and so forth. But for some reason, for the last 5 years especially, there's been a move towards protectionism, right? It's like, protect my country first. And you can see this in the US, where they elected Trump, who wants to keep out immigrants. He wants to isolate the US, right? You see it in the UK, where they want to get out of Europe. They want to be alone, and they went through Brexit. So there's a lot of this protectionism, deglobalization. Everyone wants to be more isolated in this day and age for some reason. I don't know how long it's going to last. It's going to last for quite a while. So like I said, because of this, countries and industries and companies that derive a high proportion of their revenues domestically are likely to be more stable choices in a protectionistic world. Okay, so I prefer to invest in companies that they make a lot of their money from their domestic economy as well, and not only from the international community, so that because of deglobalization, a lot of their revenues would still come from their own domestic local consumption. So because of that, I favor US companies and China companies as compared to companies in Europe or Southeast Asia. Why? Because European countries are more dependent on globalization. Southeast Asia, especially Singapore, a lot of our trade and business comes from US and UK and all those things. So if these guys are going to trade less with us, our companies are going to be in trouble. But again, for the US, you can see that 69% of US companies' sales revenue comes domestically from their own American customers, compared with only 47% for Eurozone firms. Okay, so really important. Same thing in China, right? China used to have most of its business from the global economy, but right now it's building up its consumer domestic economy. So because of that, I tend to focus on companies that depend more on consumer than business spending. Right, consumer spending quite B2C, business selling to consumer. Business spending will be B2B, right? So if you notice, most of the stocks in my portfolio are B2C stocks and less B2B stocks. Okay, so I favor sectors like consumer discretionary sector, okay, consumer staple sector like McDonald's, Nike, all right, that are more resilient than industries like manufacturing or commodities or materials or information technology. I tend to stay away from those sectors that are more exposed to trade wars. Okay, so that's the first important thing about constructing your portfolio right now and in the years to come. Number 2, enabling technologies. Okay, so right now, as you know, to survive and to thrive, businesses around the world, including my business, we are turning to technologies that enable us to scale our business, right, to grow. Example, 5G, the new 5G network that's happening right now in the world. That's going to replace 4G, that's going to transform the way we live our lives, where internet speeds are going to be instantaneous, right? Next, AI, artificial intelligence, robotics, right? More and more robots are going to take away our jobs, take over the world, hopefully not like the Matrix, but in 20 years, it's projected that 50% of jobs will be replaced by robots, including doctors and accountants and engineers and architects, right? Big data, companies that they get data, they analyze data, and they use data for marketing and for analysis, okay? Cloud computing, that's another big investment theme. Okay, so I want to invest, or rather I have already invested, and I'm going to invest more in companies that provide these services and develop technologies related to them. So when you invest in companies that are within these industries, you're going to get the best growth from your portfolio. But again, you have to know which companies, because there are many companies in 5G, many companies in AI. So you have to buy either the ETF that tracks a basket of the best companies, or you select one or two of the biggest winners, right? So some of my favorites in my portfolio already are things like Alibaba, right? Alibaba is the China equivalent of Amazon in the US, all right? And Microsoft, one of my favorites, Microsoft, one of the leaders in cloud computing, as well as business as well as consumer software, right? You've got Nvidia, okay? You have got Apple, okay, and many more. So if you take a look at this, you can see in terms of billions of US dollars from 2017 projected in 2025, right? Cloud computing is gonna go from 260 billion to a $520 billion business. AI is gonna explode, 5G is gonna explode, and big data is gonna explode as well. Now, bear in mind that as an investor, to be successful and profitable is not just about knowing about what to buy. You must know exactly how many shares to buy, when to buy, and when to sell. So, for example, these stocks that I'm talking about, these are knowing what to buy, but you must know exactly when to buy them and when to sell them. Because if you buy a good company at the wrong price, it becomes a bad investment, right? When you pay too high a price for a good business, it becomes a bad investment. And the issue with many of these companies here is that they are great companies, but currently they are overvalued. They are too expensive to buy right now. So I'm hoping for some kind of, massive problem in the markets that's going to crash these stocks at least 20%, 30% before I start buying them again. All right. So I only buy when they're really undervalued right now. So I've bought a lot of them in the last couple of years, but right now I'm not adding more. I'm waiting for another big sell-off to add more shares. Let me just show you, for example, how expensive they are. So for example, if you look at Alibaba, Alibaba is one of the most popular and successful companies from China. Like I said, Alibaba is the China equivalent of Amazon in the US, right? And if you look at the intrinsic value, let me just see where it is. Right, the intrinsic value of Alibaba, last I checked, is 1,000 Chinese yuan or renminbi. So if you convert to US dollars, it's about 153 US dollars intrinsic value. Okay, but currently it's expensive. If you look at Alibaba right now, it's selling at $217, so it's above its valuation. And you can also see from the charts that it's pretty overextended, right? You can see there was a strong level of resistance over there. This was a trending support over there. There we go. So right now the price is here, right? And it's really far from its moving averages. So this is a price where it's too risky to get in. You want to wait for the price to come back down. So how do we know how much it's going to come back down, right? I mean, you can't predict the future, but I use things like Fibonacci. So if I use my Fibonacci tool, and these are things that you learn in the stock trading course, right? You take A to B, right? We call that A, B. You're waiting for retracement to the 50% level or the 61.8% level. I prefer the 61.8% level because it will coincide with the 50 moving average, which means that I'm waiting for Alibaba to come down to 197, okay? But again, the intrinsic value, as you saw, was 157. So even at 197, it's still really expensive, okay? So it's something that, probably around there, this support level over here, I want it to come down way below there to this support at maybe 175. I'm still paying a premium for this one. But I expect that, again, by the time it happens, Alibaba's sales, cash flow, and profits will go up, which will drive up the intrinsic value by that time. So I'm going to watch that really carefully. At the same time, Microsoft, let's look at Microsoft. Microsoft is, like I mentioned before, expensive as well. Okay, way above the moving averages. So I want to definitely wait for Microsoft to come back down to about at least 143 before I add more shares, because I bought a lot many years ago, making a lot of money, but right now it's overextended. So is Apple, right? So again, I highly recommend that you take the value momentum investing course, stock trading course, subscribe to our newsletter so you know exactly when to buy these stocks, or when I buy these stocks for that matter, and when I sell them based on reading the intrinsic value and the trends in the market, right? So that's number 2. Number 3 is retail. Now, I'm sure you know about what we call the death of retail, that many stores are closing down, okay? And these are the brick and mortar stores at the malls. They're all getting killed by e-commerce retail, okay? So with unemployment at a 50-year low, which means a lot of people are not being employed, and there's wage growth and job growth, it will drive solid consumer spending. So people are spending money, but they're not going to the malls anymore. They're not going for the physical shops. They're all closing down, right? Like Forever 21 and Sears, all closing down, right? So the big money is being spent on e-commerce, right? So I'm very focused on the e-commerce sector. Many of the companies in my portfolio are selling online. So the e-commerce industry is set to average 15 to 20% growth in the next decade ahead. While some of the ETFs or stocks that are in my portfolio or I'm in my watch list would be iBuy. This is the e-commerce ETF. Amazon, of course, one of my core holdings. Amazon is still cheap, still slightly undervalued right now. We've got Alibaba, we've got Shopify, and many others as well. Next, FinTech. This is another big one, right? So FinTech comes from 2 words: financial, technology, all right? So these are companies that are using technology to disrupt the financial sector, like banking and payments and insurance, right? So the financial sector's push into digital services is so-called centered on cloud computing and artificial intelligence. So growth in the decade ahead lies in, again, mobile payments like PayPal, Amazon, Paycheck, Apple, Alibaba, Tencent, InsurTech, Ping An Insurance, insurance technology. One of the leaders is Ping An Insurance, and companies providing online credit. So this is another big explosive industry that I'm heavily looking at and investing in. By the way, Tencent is the biggest China tech company right now. And Tencent is kind of like the Chinese equivalent of Facebook, Instagram, WhatsApp in the US, right? In China, WhatsApp is banned. Facebook is banned in China, right? So what do they use? They use WeChat, which is owned by Tencent. Tencent is also making a lot of movies. Right now, a lot of the Hollywood blockbuster movies like Jumanji, for example, they are actually produced by Tencent, if you did not know that, right? And Tencent is pretty undervalued right now. If you look at Tencent over here, that's right. The intrinsic value of Tencent is about $494 per share. And again, you can buy these China companies on the US markets as well, or you can buy them on the Hong Kong markets, right? So for example, in the Hong Kong markets, this is Tencent. Ticker symbol is 700 on the Hong Kong markets. You can see a very nice trend. These on weekly candles and a very strong support bouncing off this 150 moving average. Boom, 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 and that's where I added a lot of shares. I started buying over here, added more shares here, so making a nice profit right now. Okay, or investors could also buy the one listed in the US, which is the ADR, American Depository Receipts, ticker symbol TCEHY. There we go, right? And again, you can look at weekly candles to get a nicer feel. So again, this is Tencent, which is listed on the US markets, right? So you can basically buy them on any of the markets that are accessible to you. All right, number 5 is health tech or health technology. So as you know, the world is aging, right? People are getting older and older. They want to live longer and longer, right? So, and healthcare is becoming increasingly digitized. All right. Now, I just bought my Apple Watch, by the way, right? And since I bought my Apple Watch, I've become a lot more health conscious because I'm always looking at my data, right? How many hours am I standing? How much sleep am I getting? How many hours of exercise? It measures my heart rate. It measures everything, all right? So that's the future, and it's Apple that has been one of the pioneers in health technology, as well as Ping An Insurance. And again, one of the ETFs that I look at is the biotech ETF, biotechnology. So new applications like health software, population health software, telemedicine, AI-assisted diagnostic. So this will replace doctors in the future. No more doctors around. Computers will be diagnosing you. And diagnostic imaging will help to target and deliver care, improve diagnostic effectiveness, and transform the healthcare industry. So healthcare is a big industry, especially healthcare in using technology, right? Finally, the 6th theme is defense spending. Okay, as the world gets more and more protectionistic, it's also getting more confrontational. This North Korean crisis looks like it's going to blow up again. The US just killed one of the Iranian commanders. China and the US could have some military confrontation because of Taiwan or Hong Kong. So the world's getting more and more dangerous, right? And at the same time, the Trump administration just approved a record US military spending for the Pentagon for $738 billion. Okay, so I expect there to be more wars, more conflicts, and when that happens, guess what? Companies that sell defense military equipment will make a lot of money. Okay, so for example, we have got Lockheed Martin that makes those F-18 fighter planes, and we've got General Dynamics, we've got Boeing, and we have got this ETF, which is the defense ETF known as ITA, right? And it was something I just bought a couple of weeks ago, and now because of the Iran crisis, it's beginning to fly up, right? Let me just show it to you right now. And these are things that we share on our private Telegram chat groups. Let me find it right now. Okay, there we are, right? Yeah. So this is on my chat group for investors, okay? And this was back, when was this back? Yeah, this was the one, that's right. So this was on the 23rd of December, which was last year. And if you read what I said over here, I said that, hi guys, I'm looking to build an investment position in the aerospace and defense ETF ITA. It's currently retraced to the 100 moving average. I expect growth in this industry as the US government has recently approved record spending for the defense for the Pentagon, right? So look at the chart over here, you can see a wave up, wave down, wave up, wave down, wave up, wave down, hitting the 100 moving average. So I started buying over there, and now it's up here, right? It's made quite good profits right now. Okay, let me show you the chart. There we go. Right, so you can see this is support, support, support. Price goes down, we enter the position here. It's jumped up right now, looking for it to go a lot higher. So notice when I make investment decisions, I combine what's happening, all right, what's happening in the world, right, like say military spending, with fundamentals, with technical analysis. And when you combine all three, it becomes very, very, very profitable. And that's how I'm able to beat the markets consistently, by combining these three skills that I teach to all my students every single day through our private community and our online lessons, through our online courses, of course. Alright, so we've covered so much content for the last 1.5 hours. Let me do a summary of my strategy for 2020. Alright, so number one, I remain bullish on the US markets, although I expect a lower return this year compared to last year. Alright, last year we did 29%. This year, I don't know, maybe 5 or 6%. Hard to say. We can't predict the future, but we should be bullish this year as well. Next, US markets, although they're on an uptrend, they are currently a bit overbought, overextended, right? At the height of the uptrend, so I expect a healthy correction in the next couple of weeks or months. I expect the market to come down at least 5%, at least 5 to 10% healthy correction on the uptrend. So in anticipation, I'm actually employing some hedging strategies. I'm using what is known as the snipebacks, calendar spreads, and vertical put options to hedge my portfolio. And again, if you have not learned options, do learn it. It's really useful to protect your portfolio during a temporary correction and to make regular income from your stocks, even if it goes sideways. Now, am I going to add more shares to my portfolio? Well, I'm looking to only add if I see a 15 to 20% correction in prices, because I only like to buy a stock when it's selling below its intrinsic value. I like to buy when people are panicking and they're throwing their shares at a low price. Not happening right now. So I'm hoping for some high volatile event like the trade war, exploding again. We have got US elections. It's going to create a lot of volatility, and hopefully volatility is my friend as an investor. It allows me to buy great companies at huge discounts so I can make more money over time. Now, what am I focusing on in terms of sectors? I'm focusing on stocks and ETFs with secular growth drivers, which I mentioned before, enabling technologies like 5G, AI, robotics. I'm focusing on the defense sector, FinTech, health tech, and consumer-focused companies more than B2B companies. All right. I'm also looking at the energy sector, especially for a turnaround after 10 years of being in a recession. I will especially ensure my portfolio is well diversified and employ hedging prior to the US elections in November. Because like I said, in the US elections, if the Democrats that are very left-wing, they look like they're gonna take the White House and Congress, technology, financial stocks, and energy stocks could see a big plunge. All right, so I'm gonna protect my portfolio in case that shit happens and get ready to buy more at dirt cheap prices. All right. Now, at the same time, because the overall stock market may get lower returns for this year, so I will supplement my investment with swing trading as well as options strategies like covered calls, snipebacks, and as well as short-term forex trading to achieve my portfolio target, which is roughly about 30 to 50% return every year. Okay, I avoid chasing overvalued stocks. So a mistake that many investors make is that they see the price going up, they have the fear of missing out, FOMO, right? So they jump in and they want to get in to ride the wave, and they get in at a high price. And if they get in at a high price, high chance if it comes down, they're going to suffer a big drawdown. So be patient, wait for the stock to come to you, never chase a stock. That's what my daddy told me about girls as well. Seemed to work out fine. All right. How about China? Now, I remain strongly bullish on China because China is undervalued compared to the US, and to me, it's a top performer among emerging markets. So I'm bullish on China stocks and ETFs, and I'm focusing on Chinese companies with, again, secular growth drivers. I'm focusing on Chinese companies that are focused on, again, 5G, AI, robotics, e-commerce, and companies that have low debt, avoiding the traditional Chinese companies with high debt in cyclical industries. Right? I will also continue to add positions in my REIT portfolio, which is real estate. During this current REIT correction, REITs are coming down slightly, right? With great yields between 4.5 to 7% per annum. So that's really good for collecting dividends. So that's my overall strategy for 2020. And well, just to share with you, many of you know that I trade Forex as well on a intraday basis, and it helps to supplement extra income and profits to my overall portfolio. Although my forex trading is a small proportion of my entire portfolio, but it still generates some additional profits for for coffee, basically, right? So this were my December trades. You can see forex it's a high frequency trading, all right, and I had about 11.8 R return, or 11.8% return for the month of December. So you can see I take about let's see, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 1 2 2 3 4 5 6 7 8 9 10 11 33 trades in a month, roughly about one trade a day, and my win rate is roughly 50 to 60% win rate. So in short-term trading, you win about 50 to 60% of the time, you lose 40% of the time. But when I win more. When I lose less, right? It's called the risk to return ratio. So you can see that there's so many opportunities to profit in 2020. And if you're wondering how you can keep up to date, informed of every single opportunity when it comes up, and how you can profit massively, if you want to know exactly what I'm watching every single day, what I'm buying, what I'm selling, and how I'm locking in profits, then you gotta grab the Ultimate Investor's Playbook. So this is a special monthly report that I write with my research team. And what we do is every single day we look into the global markets, looking for the best asymmetrical investment opportunities. And what that means is that we look for investments where we risk very little to make explosive profits. And we focus primarily on the US markets and the China markets, as well as some of the Asian stocks. Now, some people in the West, they may say, hey, but China's a communist country, they may take over the companies, and are you sure it's safe? Let me tell you that all that propaganda is bullshit fed to you by the media. I can tell you that, by the way, I'm not from China, I'm from Singapore, but I visit both the US and China. And I love the US, I invest a lot in the US, but let me tell you something, China is now way ahead in terms of technology and innovation. And if you don't invest in China, you're going to miss out on one of the biggest growth engines, one of the biggest investment opportunities in the next 10 to 20 to 50 years. So it's something that you got to learn how to invest in. The great thing is, whether you're living in the US, in UK, in Saudi Arabia, in Singapore, Malaysia, anyone can invest in the China markets through online brokers. So I'm going to show you exactly how you can use the right brokers, and from anywhere in the world you can invest in the best China companies, Asian companies, as well as US companies. So what kind of stocks will you see me invest in? Now, I invest in anything that's going to make me a lot of money, right? For example, last year in 2019, I made a lot of money investing in large cap growth stocks, specifically Alphabet, which is known as Google, Microsoft, Facebook. Made a lot of money on these stocks that grow 20 to 30% a year. At the same time, I also invest in large cap predictable companies like Johnson & Johnson, 3M, United Health, when they're selling at massive discounts because of short-term problems in the market. And I take advantage by buying these great companies at huge discounts. And the moment the opportunity comes up, you're going to get an alert from me and you're going to see how I put my money in there. You're going to learn exactly how I grab these opportunities. I also go into companies that are sometimes in temporary trouble, or the industry is in recession and they're selling way below their book value or intrinsic value. So I'm buying something at 50 cents to $1, and it's happening right now in the energy sector, in the oil and gas companies. So learn exactly how I'm taking advantage of that right now. Next, I also have got investments in dividend stocks, specifically REITs, real estate investment trust. So I'm going to share with you what are the best REITs you can buy around the world that gives you really high dividend yield. And many of them are even tax-free if you're in the right jurisdiction, of course. Okay. I also go into speculative growth stocks. So these are new companies that are very small, but I expect them to double or triple and become dominant players over time. Great example in 2019 was Meituan Tianping, which I highlighted on YouTube and in my monthly reports. I bought it at $70 Now it's at $110, right? It's like a 50% return in 4 months. And there's many more to come in 2020. I'm gonna find them and you're gonna watch me share them with you. Now, I don't just show my subscribers what I'm investing in. I wanna educate them on why I'm investing. So every stock or ETF that I highlight, I will share with you the in-depth analysis. I'll show you exactly how I analyze the company using fundamental research, using technical analysis, and by reading secular growth trends, as well as using the scuttlebutt approach, which means, before I invest in a company, I talk to the customers, I talk to the competitors, I even talk to the employees to find out all about the business inside out before I put my money in there, right? And once I highlight a company, it goes into the ultimate investors watch list, which is updated every single day. So you get to see exactly what I'm watching, what I'm monitoring. Once I buy a stock, I sell a stock, it goes in and out of the ultimate investors portfolio that again is updated live. You get access to this as well. All right. We also have our private Telegram chat group where, the moment I do something, I watch something, I buy something, you get immediate updates 24/7, where we will discuss and share feedback and learn exactly how to be a successful investor and trader in today's markets, step by step with me and my team. So if you're really serious about mastering the skills and the strategies of a really successful investor, that you can pull money out of the markets consistently, and you want to get the best investment opportunities and ideas delivered to you every single day to grow your wealth, then this playbook is a no-brainer for you. Now, you have seen how in my past reports, my past videos on YouTube, one idea can be so profitable. So the ideas are worth thousands and hundreds of thousands of dollars, no doubt about that. But think also about the thousands of hours of research time you're gonna save with this playbook. All right, so So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.